Good evening. Welcome to our viewers and listeners. You are on The Politics of Money, the official podcast of the IFSD, or as my brother calls it, Three Bald Men Talking Public Finance. we were just, well,
Could we rename?
We have to have a chat with your brother.
okay. All right. So we just came out of the media lockup for the government's economic and fiscal update. I am joined today by our President and CEO, Kevin Page, and Mostafa Askari. Dr. Mostafa Askari is our Chief Economist. And so we are going to kind of give our quick hot takes from the day we spent in the lockup and kind of focus on, the fiscal pictures, the credibility of the document, the government's position, and, the trade-offs of, affordability versus fiscal risk, some of the policy measures and kind of what to look forward. This is an update. It's not a budget, but certainly there was enough to chew on for us today. Kevin, first, getting under the hood, fiscal picture. What are your big takeaways from this? Starting with maybe the context we're in.
Yeah, the context is like you laid out at the front of the document. It's significant economic uncertainty. It's a slow economy. But it's a resilient economy. In that kind of context, I think that we get a somewhat of like an update. This is a mid-year update on the fiscal plan. So, I mean, the numbers are, the fiscal numbers, the fiscal planning framework is effectively on track, hasn't fundamentally changed, even slightly improved in terms of the deficit picture for the early years. So I think that will be one story that people will take away from a macro perspective.
Mostafa, maybe the picture, the economic picture, kind of that led to this fiscal situation, which, as Kevin says, on track, a little bit of a windfall, though.
It is a bit of a windfall, especially 2025. They got some relief there on the revenue side, and then they had obviously some cuts in the spending. So overall, when you look at it over the 5 years, the revenue increase and the spending cuts overall together, it's come to about $60 billion over that 6 years, actually. But then what they decided, I guess, they're focusing on affordability. Essentially, they spent all of that, about $55 billion on different measures for affordability, including the GST credit, the gas tax, and some other measures that they have included in this update.
In your sense, for both of you, on a long-term basis, impacts on long-term fiscal sustainability, these seem to be relatively targeted, shorter-term measures compared to large-scale social programs that we've seen in other budgets and updates over the last decade.
Yeah, absolutely. And I think when you look at the debt to GDP ratio track, it's lower than what they had in the budget by about 1.5 percentage points. So that by itself actually helps the sort of long-term fiscal sustainability. And the fact that you're right, all the sort of the long-term major projects, it was already in the budget. There is really nothing here that would affect that long-term projection.
So, Kevin, better deficit numbers, but that debt to GDP number a little flat through the forecast period, right?
Yeah, flat. It turns down a little bit in the outer year, by you get to the end of the decade, it starts to turn down. There is some long-term projections in this document that shows that, to Mostafa's point, that this fiscal structure is still sustainable and that debt relative to the size of the economy will decline over time, notwithstanding aging demographics. Yeah. So, lower deficit track, lower debt to GDP track. As you say, it's flat. It starts to turn down as we get to the end of the decade. The government did, as Mostafa said, they wanted to, they couldn't help themselves. They got this fiscal uplift and they wanted to spend it.
Yeah. And I guess we've never seen a government, fight that resistance when they get a little revenue surprise to spend it. And so maybe let's move on to fiscal guardrails. Like what's interesting is, we saw that the government's still on track for its operating budget balance in 28, 29. Yeah. Debt to GDP bumping along, 41 and change. But in the assumptions, to my read, a little slack in a few of the key assumptions that might give room for either spending in a fall budget or a bit of a buffer if the downside scenario maybe presents itself between now and October, November.
You're right, actually, because I was looking at the program spending and compare that to the budget. The last 2 years, actually, of the projection period, there's a big bump in the program spending, which I couldn't really figure out exactly where it is coming from, but it could be what you are saying, that they're leaving some rooms for themselves to come back with the next time if there are some issues that they could still show that GDP ratio coming down.
And what interesting political event could be at the end of that 4-year cycle?
It could be an election.
Just coincidentally, though, only coincidentally.
Yeah.
Kevin, the idea is that we've got a government now and the previous government, without some of the buffers that we've seen in the past when Canada's kind of faced some difficult or at least uncertain economic times. Your sense on some of the assumptions used in the forecast, from oil prices to revenue. Do you also share the take that there was some slack in those numbers?
The forecast is based on an average private sector forecast. So all these big headline indicators get updated. And if you go through the table, real GDP, GDP inflation, nominal GDP, interest rates, short and long, and inflation, CPI inflation, et cetera. Like it's like that. The 5-year forecast doesn't really change fundamentally, except for one big number changes, and that is you get more GDP inflation, a little bit more CPI inflation. So that makes the size of the economy bigger. We get a little bit more revenues. It's 40 billion and change in the early years, so that helps out. But I think to the point of slack, that I think, and there's people talking about this at the lockup. It was it's still people are having a hard time figuring out where to peg oil prices.
Right.
And there's some good information in the document about how Canada benefits or what happens to Canada's economic and fiscal picture when you get increases in oil prices. So the basic assumption for 2026 is is basically a small increase in the energy price. They use a West Texas US dollar per barrel, but it's up about less than $10 per barrel, when we've seen much bigger increases in spot and in future markets. So it's possible that the government may be the beneficiary, depending on what happens in the Middle East war and the oil price shock, of a higher oil price scenario, which could generate some more revenues for the government. That might give them a little bit more padding, a little bit more degrees of freedom in terms of that deficit, which is sort of hanging around 65 billion, 2 percentage points of GDP in 2026-27.
Yeah, and I'll just add also discussion with officials. We got a bit of sense that revenues were also just generally stronger in certain sectors, so that the economy was in fact proving resilient, more so than they expected. But Mostafa, there are two scenarios. If Department of National Defense, if the procurements aren't happening as fast as we expect, or as the government expects, or major projects aren't unfolding on schedule, the risk of a lapse, unspent dollars as well.
Absolutely.
Right? And so, but there are two ways you could take that. One is, there was downside risk. There was a downside risk scenario of a recession presented as well. So, tell me about how you would frame prudence in this context. Should it be more explicit, given that there is a downside scenario with an active war going on in the Middle East?
Yeah, I think you're right. The fact that they really do not have a spending target. They have a operating budget target, but they don't have a spending target. So prudence factor is sort of, typically prudence factor works when you have a target. You want to follow that target. They don't really have it, but this downside risk scenario, I think to some extent, will provide that for you, right? That if things happen that way, then you have projected that. So yeah, I mean, it is interesting when you look at those upside risk and downside risk ranges, which not a lot of people focus on that. I should even reporters never ask about those things. They focus on that middle part, the baseline, without really talking about that risk could be higher and that could be the results. And although the government has gone through this process of providing those, but nobody really pays much attention to those. Yeah.
So maybe, Kevin, we'll flip to the measures. This was a lot lighter in some ways than we've seen. We've seen mini budgets in these updates, and this had a strong element of update with some very kind of targeted measures. not insignificant, as we say, but
Mhm.
also largely pre-announced before we even got to the lockup. Your sense of kind of the signature measures that were identified, sovereign wealth fund, the training program, support for the EV sector. Why those issues? Why in an update that's otherwise not like heavy on measures? Do you think the government kind of threw those in?
Yeah, I think it's governing in these times of significant uncertainty, and there is a lot of stress. So finding that balance between like shoring up, this stabilizing the economy in the short term, um, helping people with food insecurity issues, with energy price hits on their disposable income. Still people trying to get into the housing market. I think there's a lot of this document pages are dedicated to that they're doing what they think they can do to
Mm.
alleviate the pain. And there's other, small initiatives around like helping people get access to disability benefits. I'm sure that's going to, help people. In terms of like the big capital formation stuff, if you look, there's a capital line now in the budget, which we have this additional transparency. That number doesn't budge at all, right? It's just exactly where it was at in terms on a accrual basis, and I think on a cash basis, like over the medium term. So again, that's when they talk about their strategy. It's about we're going to grow the economy, and we're going to grow the economy, boosting productivity and those things. So that the capital budget, there's not anything, in terms of significant measures that are actually costs that are going to impact the bottom line, except for this big initiative of this idea of creating a national sovereign wealth fund, and which isn't really out of the gates yet. It's out there. People are debating whether that $25 billion that they said that they're going to seed this fund, is it even in the document? Like they mentioned it on a line, but you can't really see it in the tables. Mostafa and I were looking for it. So it's really early going on that side, but that is an example where they're going to, again, try to boost foreign direct investment, bring it into the country. They're going to have this conference in the fall, get things kind of moving. So yeah, again, just trying to balance this thing, longer term trade diversification, capital formation, national defense buildup with the shorter term stuff. People are under a lot of pressure. They're getting squeezed on food. They're getting squeezed on energy, and it's still hard to get in the housing market.
One measure that actually surprised me was the PPP contribution rate decline. This has not happened for many years.
Yeah.
And I think they decided to go ahead with that. And it's something that everybody will benefit from, even the employers will benefit from that. But it is an interesting that they came up with that idea. I assume that with actuary assessment of the pension system seems to be very good. That's why they can actually reduce that rate.
I think my understanding is that they took like 2/3 of the available room that they had. They left some room.
But just on that measure, like, do you folks think is it more about the signaling that we're in a position that very few countries are in, where we can actually provide some ease on pension contributions? Other countries can't do that, so we're doing it. But actually, the amount of money it's not that material, is it?
No.
Well, for individual may not be, but overall,
yeah, you had $130 for every employee for a company.
Every employee.
I think
that could come
your
up
point
with.
also about the signal. This is one of the hardest taxes on firms, right? Payroll taxes are, we think about HST as low and spread over. These are pretty injurious taxes for economic growth. So I wonder if that's a little bit of a signal, not the amount, but the idea that actually we can alleviate some pain for businesses and for individuals, and maybe a sign of things to come, because we haven't really seen a business friendly kind of budget in a while, right?
Now, in terms of the document itself, it looks more like Mostafa and I were in Department of Finance in the 1980s. It looks more like a fiscal update of the 1980s. It's it's over 100 pages, but it's less than 200 pages. It's a lot about the economic outlook. It's an update. The government's 1 year into its mandate, so it's still kind of hard to get into the operations. But in the context of the Canada Strong Plan, do you see some transparency gaps?
Yeah. So a couple of things about that. I would have wanted to see, I think we signaled this earlier, that some kind of a dashboard that helped us understand, so where are these big projects? Where are these major procurements? And what are the obstacles and constraints? Because I think, Canadians are expecting, we talk about the economy doesn't react to, media releases or fiscal allocations. It reacts to shovels in the ground, investments we've made, people being hired. And at some point, this government's going to actually have to say, we can't just keep putting out these frameworks. They're all important. We need trade agreements. We need, funds to be able to invest, and we need the right climate. But they also need to know, so where are these projects, and what kind of progress can we demonstrate to Canadians? So, between now and this budget, the next budget, I think parliamentarians have to understand, because where are these departments, right? They're putting out departmental spending plans. They don't have anything about execution in them.
Yeah.
So what kind of debate are we having in Parliament about delivery? Because I think Canadians can identify with delivery. They don't identify with a document with tables. Most people are busy doing other things. But you start to, I remember Jean Chrétien used to talk about, was interrupted during an interview outside because there was construction and cranes. He said, "Yeah, I love the sound of construction.
Yeah.
I like the sight of cranes." Right? And there's a
Good question
psychology.
to Mostafa, because Mostafa, you raised the issue because, we go back, to the 2009-10
Yeah.
fiscal stimulus, and we had quarterly reports, and you talked about this as an idea. There's a document that we don't have, and maybe we shouldn't wait till the budget come the fall, but operationally. But the question is it too early to show results? Like, we're 1 year into this mandate.
I mean, they don't have to show the actual result. They can show the progress, the steps that they have to take to get there. And also, as Sahir said, all the problems that they face getting there, they can mention those.
Yeah.
People will know about it, so they won't bug them all the time about why you're not doing that. So I mean, I think that should be done, not only for those projects. It should be also done for the defense spending.
Yeah.
Because we don't really know exactly how they're gonna achieve the 3.5 target or a 5% target. There's no information there.
And meanwhile, the nominal GDP at the end of the forecast period, it's almost $4 trillion.
Yeah.
So that 2%, that 3%,
so it is going up.
it's going up,
yeah.
right?
Yeah.
And
it's
So
going up.
would you say that that's, the biggest transparency hole in the document is the fact that we don't have a national defense planning line, or that's consistent
we still
with
don't.
NATO?
We still don't.
And why should, they could do it. It's not.
Yeah, well, it's a good question to ask them. Why is it that unless they don't know how they're going to spend the money, so that's why they don't put that out there.
But Kevin, I wonder if the pay increases, the stuff that's maybe easier to do.
Yeah, those are easy.
Yeah, you can integrate the Coast Guard. We're at the limits of things that maybe they could have done easily, and we're probably into the things now that probably are hard. And I think one of the challenges, I don't think we see within the bureaucracy, within the public administration, major structural changes yet, right? So why are we expecting a different result if we don't see the changes in the organizations that deliver?
Yeah.
And so I wonder if this is where, they're struggling between the political level and the bureaucracy. But I don't think we can go too much longer without understanding, so where are the impediments? Because these are complicated projects. There's FedProv negotiations very often, Indigenous consultations, but also the business cases of the companies. Companies are screaming for, we need these resources, this money, regulation. Well, where's the business case? Are these viable projects? So I think there's a lot that goes into this. And absent this disclosure, I think the reflex is going to be blame the federal government. We're not getting stuff done. Maybe transparency is, we're not political people. Maybe transparency can be good politically.
Yeah.
The PM's already been kind of trying to reset some expectations.
Yeah.
Maybe this is part of it.
I think, though, that they have to do something quick on national defense. They have to build it into the planning framework. Is your point, $4 trillion economy, 1 percentage point of GDP is $40 billion.
$40 billion.
That's a $40 billion annual increase that's going to go to national defense.
Yeah.
Like, this is a planning framework. This is an allocation. They may not know the details in terms of which is operating, what is capital, what are the different types of capital they're going to have 5 years out. But I think people need to know, are we really moving to that target or not? And if to me, they're hiding that part of it.
Now, we talked about, so here we are. It was an update. It was an update with some measures, kind of focus on the affordability side. We're probably now heading into the summer break, majority government, and a budget in the fall. So what should we be looking for between now and that fall budget from each of you?
Well, for me, I think we need to see that operational plan that underpins the Canada Strong plan, and We didn't get it with, the departmental plans. They can't be aligned, with the November 2025 budget. So we need some overall operational plan because I think you want confidence and trust in this environment when you're dealing with these, energy shocks, potential trade shocks, all this volatility you have to steer. How are we moving back to Dr. Scary's point? Are we making forward progress on all the different aspects? Another transparency gap, I think, is on the $60 billion worth of savings, right? We don't have department by department savings estimates, personnel, other grants and contribution savings by department. So are they securing even that amount of savings? So I think we need to see an operational plan that's consistent with this stuff.
And Kevin, where's Treasury Board in this? Right. So we've got PCO finance, help put together policy direction, the broad fiscal allocations. We have there's a department, a central agency that should be connecting those dots into execution, operations, and efficiency. Why aren't we seeing it from Treasury Board?
Well, I think you're right. Treasury Board is a central agency that would bring that all together. I think Cabinet, the executive should want to know how are they making progress on Canada Strong, and then Parliament's job, given that we are dealing with these elevated deficits and these very important times. Like Parliament should be holding the government to account based on those plans, department by department, consistent with this document.
Mustafa, things to watch for.
I think what Kevin said is right. I think we should see some more details on their plans for infrastructure investment, the big projects, and the defense. Also, probably where I'm looking for more details on this wealth fund, how they're going to organize that, who is going to be in charge of that, what kind of because this is going to require people that are experts in the area of investment and financial studies. It's not the job of the public servants. You have to bring people in, and I want to see some progress in that. How are they going to manage that? How are they going to organize that?
Mustafa, don't we have an alphabet soup of Crown agencies doing this? I think CGF, Canada Growth Fund, CIB. What's under this that required a new Crown organization to be established?
Well, that's a good question. Whether they need a Crown or not, or they could put it somewhere else. But I guess part of that probably is that they want to separate that as much as they can from the government, being independent in making decisions.
Because I would say, Sahir, that and Mustafa, that the Prime Minister is setting the stage for his fall conference, where he wants to create a financial instrument
that's a good point.
that people, when he's out and he's made 20 plus trips all over the world, he's talked to business leaders, he's come back and said people are interested in investing in Canada. So he create this financial instrument, this organization that other countries could provide their direct investment, and we need that foreign direct investment.
And I think I get it. I agree. If it's a signal, and you got the Maple 8 major institutional investors in Canada come the fall, say, okay, we're in too. We're not just going to buy foreign equities with Canada's pension contributions. We're going to invest in Canadian infrastructure, Canadian projects. I think this makes sense. It's a signal. It's a catalyst. But I guess we're back to what comes next, right? You've got the announcement. You've got this framework. Can't quite even see the numbers. But it really now depends on, so how are we going to use this to get a result?
How are we going to use it? How are we going to set it up? We don't really know. I mean, they said Crown Corporation, but we don't really know how they're going to set this up and how Canadians can contribute and invest in it. How, on what basis, under what conditions, and none of that is clear yet.
Okay, so we're going to close on this question now. Fiscal update, very often we frame these as documents that offer an opportunity to build confidence, maintain confidence. How do they do the job, and what for you, Mustafa, and how could they do it better?
I think they did what they could do, and other than some of those transparency issues that we raised earlier, I think other than that, it was a pretty straightforward update. There wasn't really any surprises in this that I could point to. It was pretty much very sort of the stay the course kind of thing.
And I guess watching the fiscal monitor and understanding some of the machinations inside government, we could sort of anticipate a better than expected deficit, right?
Oh no, absolutely. I mean, we knew that on the economic side, they're gonna see some windfall from the revenue side, and they got it.
And Mustafa, just ask just a quick follow up. Some talk politically about why don't we drive towards a much smaller deficit? Currently there's some slack in the economy and output gap. Maybe you can just explain why, or that might not be the best idea right now.
Well, again, I think going back to what Kevin has been saying all the time, it's a hinge moment. And the economy is under pressure, and we are under attack from the Americans on one side. So the government has to be careful in how they're going to manage it. So reducing the deficit as a sort of an objective at this point, it may not be the right thing that they can do.
Kevin, your take on building confidence, maintaining confidence from this exercise?
I think the document kind of holds the ground in that there's, I think this wealth fund is probably the biggest potential development to developing the Canada Strong for All plan in terms of, building the plan to deal with this existential crisis, this hinge moment. I think what they basically saying in this mid-year update, notwithstanding all this economic uncertainty, the Canadian economy is held up. It's been resilient. It hung on in 2025. Growth is weak, but it looks like we could potentially hang on this year. And we're still on fiscal track, right? And as Mostafa said, we can still get to potentially an operating budget balance, and we can get to deficits in the 1.5% range. That is all capital, in 2028, 29 moving forward. So no operating deficits. So I think they're holding on to confidence, and there's this potential idea of a wealth fund potentially is developing the Canada Strong plan.
All right, so I think we can generally agree that at least this government held on to confidence of markets and Canadians, but it's fragile. Better transparency, a focus on delivery is going to be required to maintain that confidence. And we're expecting more from this government as the spring and summer progress, so that by the fall, we're starting to talk about results, right?
Yeah, and I don't think bond rating agencies will have any issue with this update.
Yeah.
Because, there's nothing really.
Yeah, numbers are a little better.
Yeah.
Just a little bit better.
Yeah.
Nothing really.
And a nod for Canadians, for households that are feeling the pinch, right? I think, one comment, Prime Minister said, on average, incomes are ahead of inflation. But Mostafa, I know the work you're doing right now is showing that we have 2 quintiles at the bottom.
Yeah.
For whom that doesn't apply,
That doesn't.
right?
Yeah.
So the anxiety is real, and I imagine that probably explains why there was a focus on affordability for whatever they could do within the constraints of the fiscal targets they set for themselves.
Yeah.
All right. Well, that's a wrap. One take, as you could probably tell to our listeners and viewers, but we wanted to kind of get our unfiltered thoughts as we kind of just reassembled after the fiscal update lockup. Thanks for watching. Thanks for listening. This is Sahir Khan for the Politics of Money.
Thank you.
Thank you.